First presentation is pretty much hot off the press, no kidding. The results of the Michigan Future Business Index. We're pleased to welcome Mike Witt, Senior Vice President of Asset Management at Cinnaire. And Mike, I'm not going to do the 3 pages of your credentials, so why don't you get up here and tell us what's going on.
Thanks, Chris. Yeah, no need to read my bio. I'm good with that, so I'll keep it short. So my name is Mike Witt. I'm the Senior Vice President of Asset Management at Cinnaire. In my role, I oversee the financials of our affordable housing rental lending program within our tax credit equity market that we do. So for those of you that don't know, we're like an investor in low and tax credit properties across not only Michigan, but a 10-state footprint, mostly in the Midwest and the Mid-Atlantic. So a little bit about me. I am a lifelong Michigan resident. I actually grew up in St. John's, went to MSU, and I moved really far to Witt, and my family and I live in now. So that was my long commute, and I got here just in time, and I hope I didn't scare anybody. So the roads didn't help me, and I had to drop 2 kids off at middle school, so it is what it is. The Michigan Future Business Index Survey, I know you guys have seen it for a while, provides an opportunity for business leaders to share their insights and provide perspective on Michigan's economic outlook. So the information is collected. It's critical to providing support and success of business in Michigan and providing data for policymakers, community leaders, and advocates to better understand current challenges that businesses are facing. This year's survey, it included 609 small to medium businesses, providing feedback both online and via telephone conversation. And it was collected from mid-November until the end of December to give you time frame when people were feeling the way they were feeling. So a little bit about Cinnaire. We are a nonprofit financial partner that supports affordable housing developments and community and economic revitalization. We're located here in Lansing. We've got offices throughout our footprint. We've grown. We've got about 150 people that work at Cinnaire now, which is great. I started 4 years ago, and there was about 100 of us. So we've had some staff growth, which is great. Over the last 30 years, we had our anniversary last year in 2023, and we've invested in nearly $5 billion to support development of over 800 apartment communities in 10 states, which equates to about 50,000 affordable units and 10,000 individuals and families that we've served throughout our footprint. So, on the results of the survey, there we go. Yeah, I was going to say, do I have to click it? No, you got me. Good. So, some key takeaways. There continues to be some concern over wage inflation and supply chain issues. This is something that we see in our tax credit equity business. I've still got properties that are telling me that it's costing them a lot more to hire staff. Additionally, it's still a little bit hard to get product for new construction and rehab projects that we have going on, but it has gotten a lot better in the last 18 months, I'll say that. So, some good news there. Optimism. There's optimism that brighter days are ahead despite sales and profits hitting record lows over the past year. Respondents overall had satisfaction with the economy. It remains positive, with many being satisfied with the Michigan economy overall. Almost half of businesses have recovered from COVID and see positive trending projections in sales and profits. Hopefully we can stop talking about COVID in the next couple of years. We just don't have that on there anymore, but it is what it is. And lastly, nearly half of the respondents are optimistic about future growth and demand. All right, let's talk about the past 6 months. Wage increases continue to fall, so 56% of respondents say wages have increased, which is down about 6% from last year. About a third of respondents are reporting sales increases, which is down about 7 points from last year. Profit increases remain low, as about 20% of respondents report profit increases, which is down about 5 points from last year. And then hiring is down 2%, with 20% of respondents saying that they have hired new employees. Investments do remain steady from a year ago, with 24% of respondents having increased capital investments within the same time year over the last. Satisfaction with the economy. So satisfaction with the economy is up 44% from a year ago, with 50% of respondents saying that they were satisfied, 39% being somewhat satisfied, and 11% being very satisfied. So pretty positive results there. On the flip side, the percentage of those who are dissatisfied with the economy is down 56% from a year ago, with 44% being dissatisfied, 33% being somewhat dissatisfied, and 17% being very dissatisfied. One challenge Cinnaire is facing with satisfaction is the dual nature of our business. So we have an in-demand construction industry combined with rising costs of materials, and it's proven beneficial for general contractors. However, our development and maintenance side of real estate has really seen a challenge there with rising expenses and slow revenue growth on our properties. Satisfaction with economic trends. You see this graph here. It shows trends over the last 17 years. It probably doesn't come as a surprise as to what it looks like, right? We see as the economy's gotten better and worse. 2008, 7, and then got really well, really good at the end of the teens, right? 18, 19, and then COVID hit, and we kind of ratcheted back. So probably what people expect to see. Greatest challenges to doing business. So the result of this, the number one thing, acquiring talent, is back to the number one challenge for folks. I'm sure all of us probably could agree with that. I will note that percentage cited was far less than it was a couple of years ago. In 2021, when it was 49%, so now it's only 16%. So retaining talent does also remain an issue, and talent overall is still a concern for folks, as being noted. Inflation is still high on the list. Probably doesn't surprise anybody either. But in the past, like it has been in the past, but again, the percentage of response is lower than in years past, which is a good thing, but people still call it out as a challenge. Health insurance cost is also on the list, but it's at a lower level than it has been in the last couple of years, which I think we're all happy with. I will tell you from Cinnaire's perspective, we've seen the length of our hiring process increase in the last couple of years, though a big part of that is we do it somewhat intentionally to bring in high quality new folks so that we can retain them and not have massive turnover. We're pretty intentional with our hiring process, and we're focused on a lot of DE&I so we can have a diverse pool of people, which then turns into diverse staff, but that sometimes takes some time. So, greatest reason for optimism. So the results of that, top part there, demand for product leads as the top reason for optimism, which is similar to the last couple of years, with a level of respondents reporting this year remaining steady at 17%. Business growth and expansion continue to remain high on the list as well as they have in years past. The end of COVID is still on the list, but only 1% of respondents reported this year, which last year that was nearly 10%. So maybe next year we just don't talk about it. We'll see. There are some good things that came out of it though, right? So emerging from COVID, so how is your business doing now? You can see the graph here, the insurance, financial, real estate sector saying that they're most likely doing well to excellent. The real estate and food sector have the highest percentage of respondents saying that they're still not doing well or doing poorly, which probably doesn't surprise a lot of folks. Cinnaire is in the real estate sector, so I think it's affected us a little bit differently. One thing I would say though, we would respond probably saying good to excellent from where we're at. Being in the real estate sector helps, but our response is based more on some of the positives that came out of the pandemic for us. So one of the things that we looked at was how do we do our capital raising cycle so we can invest in the properties. And we did it intentionally during COVID, knowing that we were going to have some challenges, and it actually worked out really well. And it's now a long-term solution for us as to doing, certain cycles and working with our customers to do that. So, it was something that we probably may not have done had COVID not happened, but it's worked out really well. And we're actually, because of that new strategy, have projected growth in our equity raise team to significantly grow it through 2027. So a real positive that came out of that. Plus, I think people like working from home, right? From the weekend, snowy like today, stay home work. So it wasn't a thing 4 years ago. It's really strong. Emerging from COVID-19, when do you expect to fully recover? Nearly half of the respondents said they fully recovered, which is pretty unchanged from what people responded to in June, but that is up 6 points from a year ago. The percentage of those that say they aren't sure they will ever recover has increased 6 points since Q4 of 2022. So you can see the pie chart there. Those in the manufacturing and construction sector were the most likely to believe they've fully recovered. That was 53%. Then the retail and food service sector, again, similar to the last question before, most likely to say that they will not. Sales and profit projections are improving. The growth is up 49%, which is 4 points from last year, with the expectation of sales decreasing down from 6 points last year. Optimism for profit increases has gone up to 36% of respondents reporting this, which is 4 points higher than last year. While those expecting profits to decline is at 16% of respondents, which is a decrease of 11%, or 11 points from last year. Hiring has rebounded slightly. Overall, the level of respondents who plan to hire more employees over the next 6 months has been pretty stable. There was a 3-point increase from June of 2023, but it was overall down a point from where we were Q4 of 2022. 53% of respondents plan to maintain staff at current levels, which is up 5 points from last year, which is good. Lastly, 5% of respondents say they plan to lay off employees. That's a pretty low number, which is good to see. I can say Cinnaire is pretty proud to say that we've not had any staff layoffs from COVID or really since then. We've grown our staff for the last 3 years. Like I said earlier, we were at about 100 when I started 4 years ago. We're at about 150 now. A lot of that growth has been in some of our expanding business lines, such as our lending team. We've grown out our lending team for floater lending and really put some good resources toward that. Data indicates that talent acquisition continues to improve. There's been an increase of respondents feeling pretty good or excellent about their access to qualified talent, which is up 6% from last year, coupled with a 7% decrease in respondents saying their access to talent is only fair or poor. I was sitting at the table earlier and we were talking about how great it is to hire MSU grads, right? Bob likes to Madison people, so which is great. I will push for that all day. There was a 58% report that they're having difficulty filling open positions, which is down 6% from last year. So while overall finding talent is still tough, numbers are trending in a better direction. Wage increase projections are down. Respondents indicated that concerns over wage inflation is lower than where it was before. That said, it's still pretty evenly split on respondents who expect to raise wages, which was 45%. To those that do not expect to raise wages, which is 48%, so pretty split there. The sectors with the highest expectation of wage growth was the insurance, finance, and real estate sector at 57%. I will say this is an area that Cinnaire continues to monitor in our effort to attract and retain good talent within our industry. A couple of years ago, we engaged in a compensation study to ensure that we were, in the realm of where we wanted to be with our peers in the industry. And to ensure that we can attract good people, but also retain them. It's obviously a lot easier to retain good talent than to go find new people. Projected investments in growth. So the returns on this, the biggest one, investments in employee training, led this response it has in previous years, with 60% saying they plan to do this. And then investment in advertising was also high on the list this year, with 51%. Overall conclusions. Biggest things, inflation still worries people. Those numbers are declining, while overall satisfaction with the economy has been positive over the last 2 survey periods. Although sales remain at record lows, there are optimism for future sales and profits that's trending upward, which is good. Plans for new hiring are ticking up, yet businesses remain focused on improving their teams through training and promotion. Lastly, COVID recovery is complete or nearly complete in most businesses. Yet few are still challenged with supply chain issues that started due to COVID. Last bit of conclusions here. Overall, Michigan remains a good place for small businesses, with 62% saying that they believe Michigan remains pretty good, which is 46%, excellent, 16% market in which to do business, which is no change from Q4 of last year. And 59% say our state business tax are mostly, 53% said mostly, and 6% said very fair, which is down 3 points from Q4 of 2022. So that is the end. Thank you so much, Chris. I'll turn it back over to you, and Cinnaire appreciates being able to help.
Next up, and we'll talk a little bit further, I'm sure, from the perspective of vacancy as to the interest rates, the the effect they're having on the building and the fact that maybe right now, especially in the residential area, there's a shortage of housing and high interest rates keep that from being feasible. There aren't many people building on spec right now. So with that, to give us up to date on, I guess, room is basically the underlying thing, vacancy rates, etc. And who knows it better than Van Martin from Martin Commercial Products. Van?
Slide in here, just like I did this morning driving. A little dicey. First, I'd like to thank members of our Martin Commercial Properties team that are over here. Somebody made the effort. Samantha, Lee, stand up. Chris Miller, Eric Rosecrans, longtime partner of ours, Key, 44 years with us. Jason Brunette heads up our development construction. Jamie Taylor heading up our marketing. Put this together for me today. Thank you, Jamie. And Zach Phelps, one of our new associates, recently joined us. So anyhow, welcome. Glad to be here and take a look at what's going on in real estate. Kind of a interesting time, as you can imagine. We've been through a number of these cycles over the years. I hate to think how many of them. But I would say at this point in time, what are the key factors kind of driving the economic landscape relative to commercial real estate? And, obviously interest rates and inflation are at the top of the list on that. The increased cost of borrowing, quite frankly, it's not just the increased cost of borrowing, it's the availability to be able to get the money for real estate projects. The landscape and the financing side has changed dramatically out there. And obviously it's had an impact on the profitability of new developments. Many of these are getting put on the sideline and is slowing things such as construction and housing starts and things of that nature down. Because the feasibility of them just simply, they really don't pencil out. And it's not just a matter of the projects not penciling out, it's a matter of real estate investment when they come up for refinancing, that many capital stacks all of a sudden are inverted and you're upside down because of the impact of the increased costs, primarily from the cost of borrowing, but the operational cost, increased vacancy all have an impact. And so it's made it very interesting. You can see below that, investment volume down 42% overall. This is on a national basis. Many statistics show that this is down as much as 60% from the previous year. So, where did this come from? How about 11 Fed rate hike rates in 11 months? In 18 months. 11 increases in 18 months. It's the fastest, steepest increase the Fed has ever taken this up. And so this went from March of 22 basically to September of 23. We were looking at Fed funds rate. Where were we out there? About a quarter point. And now we're looking at something, 5.35, 5.5%, percent on the Fed funds rate. So what I like to say is no capital for nobody. You can't get the money, even if you want it. And to a large degree, it's regardless of product type, it's regardless of your credit, and it's regardless of the, the metropolitan areas even that you're in. It's just a byproduct of what has happened in the banking industry with these Fed fund rate increases, and has put many of these banks in a position where they just simply can't push the capital out. So commercial real estate will continue to face, really strong headwinds going forward in 2024. I guess we're going to get to that here in a bit. But obviously, construction starts, saw a sharp decline overall, pretty much across all product lines. And the largest one there, not unexpectedly, is office, with them down about 40%. And we expect, further declines in 2024 in this regard. Deal volume, basically transactional volume and so forth, is relatively stagnant across all asset classes. I would say the exception would be the industrial market. The industrial market has continued to kind of be the golden child We had about $750 million of 750 million square feet leased in 2023, and we're seeing very strong year-over-year rent growth. Last year was about 15%. So the industrial market has remained a top performer in that regard. So did we cover most everything on the factors there for 2023? I believe we got it there. So now we're on to kind of looking at the next chart here of, I think I'm on a line.
You're in line.
Red line.
This is your first time I've ever been in line.
Yeah, this one, we're gonna have to talk from the chart here. So looking at the various sectors here, we've got the office sector, and as indicated on the financing. Coming up in by early 2025, we've got about 150 to 180 billion dollars of office commercial real estate loans that have to be refinanced. Overall, this figure is about 1.5 trillion by early 2025. And if you're looking at the state of the ability to finance real estate in today's market, as I indicated, the headwinds that we're facing, really are pretty strong. Vacancy really will peak, I think, in 2024. The historic high for office vacancy was at 19.3% in 1991. Okay, currently we're at 19.2. So we're there. So we think we've kind of hit that. The leasing activity we expect to improve. I would say it has improved. There has been activity. There are churns and deals occurring, but everybody in the office sector likes to talk about the workplace strategy, what's occurring, and there's been dramatic change, obviously, in how people are looking at their workplace strategy and the decisions they're making for their particular companies. And then we expect the activity in 2024 to be about 20 to 25 or 5% lower than where we were kind of pre-pandemic levels. So downtown, we kind of pulled out a sector here in terms of what's going on in the downtown sectors. Downtowns continue to evolve, and that's really what's kind of happening. We're even seeing that in Lansing, going from the old traditional central business districts as we think of it in a traditional sense, and it's going more to a central activity district where you're seeing the inclusion of more types of businesses, entertainment activities and so forth, and you're seeing these in other venues such as retail at malls and what have you. So that's the downtown. Next slide. So now we're at the housing market. We've seen probably a slight increase with the drop in interest rates here in the last couple of months. We expect that the housing market at some point in time is going to bust loose. So if we get a continued drop in the Fed rates, they're talking about three rate drops here in this year, and we pick up 100 200 basis points, then we should start to see some more movement. But right now, people are kind of staying where they are. You can't afford to sell their house, go out, take an interest rate. We were just talking about this last night, right, Jason? That if you got an interest at 2.8% on a 15-year deal, it's kind of difficult to go to 6 or 7% and justify what you're doing. So people are kind of sitting tight. The housing stock is obviously a major problem across the country. There's a lot of discussions on workforce housing, affordability, every market, and everybody is facing this. We've got an inventory shortage on the apartment side of about 4.3 million units through 2035, and upwards of about 6.8 million cumulatively for all housing categories. And somehow we gotta make this up, and until things bust loose, it's gonna, we're just gonna be facing that situation. On the industrial front, I think the industrial will slow a tad bit. We've seen vacancies increase, a tad bit from 0.03% up to 3%, still exceedingly healthy. If we're working with our friend Bob Trezise from Lake here, and they have they got companies looking for space in Lansing market. You just don't have a lot of options, and so I know that we struggle with that. On the investment side, we're going to continue to see the cap rates increase. Of course, this is an inversion. Cap rates go up, values go down. What's the impact on commercial real estate? It's been significant. And we see a lot of office buildings in major metropolitan areas that literally are just being, off. I mean, they're just letting them go for, $10 a foot. I mean, 10 cents on the dollar. People are buying buildings in the Loop for, I read one the other day, $4 million. And, the group that had bought it before, they had acquired it for like, $50 million. So there's a lot of major office assets that are trading, and people are, they're making a play on them. But and there's a big, discrepancy here. The good office, the well-located office, the well-amenitized office continue to do well, and they're actually, you're seeing rent growth for the Class A. So it's kind of the flight to quality, because that's what the companies need. It's what they want for their employees. They're trying to create an environment that's positive, again, to retain them and attract them. So the good stuff is doing good. So the old mantra, location, 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 is very important, and that's continuing to play out in that regard. But that's just kind of a macro look at it, and you're kind of back to the cash is king. There are some asset classes that are performing well on the investment side. So I talked about the discrepancies on A, B class type office. Retail has been surprisingly strong post-COVID, especially on the convenience side. Some of the fast feeders continue. You see the dollar stores continuing to expand very aggressively, upwards of 10,000 new units coming online. The triple net investment remains strong. Again, it's back to credit that drives this. And then you've got the industrial multifamily that have remained relatively strong. And then you got various niche groups, manufactured housing, data centers, cold storage. Those actually are all performing, quite well. So that's where we are in the investment volume. So relative to construction, I think we're going to continue to see starts will slow. If you talk to the architectural and engineering firms, they're short on what they've got on their pipeline. And if you talk with the construction firms, they're looking for new projects in terms of what's going on there. Retail, as indicated, has been a strong performer post-COVID. In a lot of the groups, one of them that has not performed as well are obviously are the malls, and you're seeing the malls that are trying to reposition themselves for more of including entertainment, mixed-use housing, but they're emerging and evolving and changing as we go forward. And so that's kind of the niche groups where we are. And if you have more time, we could talk about the top issues affecting real estate.
We're going to have time right after this.
Okay. So, thank you.
Thanks, Ben. Truly appreciate you bringing your expertise here. One of the things that occurred to me when you were talking about office is I look back and saw Steve Flavor and the DBI folks. One of the things that's happening in office is redesign. And that's where a lot of people are spending their money right now, because interest rates don't allow them to move to bigger places. At any rate, next up, and this is a new addition, because we realize that one of the bigger industries in the state of Michigan and around the country is health care. And so we're going to bring up right now Brian Peters. He's the CEO of the Michigan Health and Hospital Association, to bring us up to date on what's happening there. Welcome, Brian.
Thank you so much, Chris. And it's a pleasure for the Michigan Health and Hospital Association to partner with you and the Michigan Business Network. And certainly a pleasure to be here this morning, as Chris said, to talk about what we believe is actually the largest employment sector in the state of Michigan. As you see the slide here, 568,000 direct jobs in Michigan healthcare today. And in fact, the largest subset there are the hospital jobs. We employ some 219,000 Michiganders throughout the state. And in fact, when you look around the state, whether it's the larger cities, Detroit, Lansing, Grand Rapids, or our small rural communities, the hospital is quite often, if not one of the largest employers, the largest employer in that community. We're very proud of that economic engine role that we play, in addition to the critically important role that, of course, our hospitals play by being open 24/7, 365 for a wide range of highly needed healthcare services for our communities and creating healthy workforces as well. For those who are not familiar with the Michigan Health and Hospital Association, we are an advocacy organization based here in Lansing. In fact, we have an office in downtown Lansing, right across the street from the state capitol building, and our headquarters is in Occurrence. We have about 100 employees at MHA, and my friend Van Martin here was very helpful to us in facilitating our move to our new Occurence headquarters, by the way. Appreciate that very much, Van. But we have 100 employees representing all 219,000 of those hospital employees throughout the state. And we have an incredible staff, a number of whom are with us today. If you could just please stand. Adam Carlson, Lauren Lapine, John Karazinski, and Kennedy Walters are here this morning. Thank you for being with us. I wanted to share with you just very briefly the top priorities for the MHA Board of Trustees. And again, this is a board that is broadly representative of our membership, both large and small, urban and rural. And I have to tell you that workforce was identified by our board as our #1 priority. So very similar to what you've been hearing earlier this morning, this is the case in healthcare as well. We have been working very directly with the associations that represent both the four-year universities and the community colleges to create even a more robust pipeline to help train doctors, nurses, pharmacists, all of the other skilled positions that we so desperately need in hospitals and healthcare writ large. We are affected, just as many of your organizations are, by the demographic reality. We have so many nurses, for example, who have reached retirement age, many of those baby boomers who have moved on from the field. COVID certainly turbocharged that phenomenon. And we are now in a position, you see this in the graphic on the screen, of hiring some 8,500 open nursing positions today, many of them right here in town. 4,500 technician openings, 3,000 positions for clinical assistants, the list goes on. And so while we are an economic engine and a major employer today, I will tell you, because of our aging population, that translates to two things. One, more demand for healthcare services into the future, but also the other edge of that double-edged sword, we have a lot of folks leaving the field and we need to replace them. So healthcare is a place to look for our young people, and in fact, just last year the MHA launched a new effort, including a website, mihospitalcareers.com, where you can go and find all of the relevant information. There's never been a better time for young people to consider an educational track in healthcare because of the financial support that currently exists. And there are all sorts of programs that our hospitals have implemented very recently, including loan forgiveness for those who seek to work in a rural or medically underserved community. So again, healthcare, truly an economic driver. But that is the #1 priority, was the workforce aspect. And we have a host of advocacy priorities at both the state and federal level that are directly related to workforce. #2, viability. The absolute viability of our membership is at stake right now. What do I mean by that? Well, we've talked today about rising cost of labor, rising supply chain costs. We have those in hospitals, we have those in healthcare. We also have the phenomenon of dramatically increased prescription drug costs. And the challenge for our members that's a bit unique, that econometric model that's a little different in healthcare for a number of reasons, we are a price taker for a huge swath of our business, meaning the federal Medicare program tells us what they will pay. The Medicaid program, which is a shared state and federal program, they tell us what they will pay. Insurance contracts are negotiated years in advance. Those don't turn on a dime. And so the ability of hospitals to take all of these rising costs and quickly pass those on to the end consumer is extraordinarily limited. And that is why our hospitals have struggled financially, why you're seeing so much integration and consolidation, not only in Michigan, but across the country. And this is a phenomenon that not only the hospital associations like MHA are lifting up, but certainly if you look at independent third parties like Kaufman Hall, you look at the bond rating agencies, they will tell you exactly the same thing. These challenges are real. So financial viability is certainly a priority. Behavioral health is the third strategic pillar of our board action plan. As many of you know, we have a behavioral health crisis here in the state of Michigan. That is true in every corner of the state, and we're working very directly on that topic. And then lastly, the fourth pillar is health equity. We knew even before the pandemic that we had health outcomes for people of color in the state of Michigan that are dramatically worse than the rest of the state, particularly when it comes to neonatal mortality rates, infant mortality rates, morbidity rates for African American women in communities throughout the state of Michigan is extraordinarily high, and that is completely unacceptable. Our board looked at that data, looked at that phenomenon, and said, we have to make a difference. And so I'm very proud of the fact that every hospital in the state of Michigan has signed a pledge to do their part to address both racism and also implicit bias that exists in Michigan healthcare. So we're on that journey, and I'm very proud to say that we've done a lot, but we have a long way to go. So those are the four strategic priorities that really fit with where I think the field is headed. One last point I'll lift up, you can see it on the screen here, and that is cybersecurity. We're all grappling with the reality of cybersecurity in this day and age, right? But the unique challenge for us is that the FBI, for the last 5 years running, has said that healthcare is the #1 target globally of bad actors in the cyber realm, including the nation states. North Korea, Iran, Russia, and China have prioritized healthcare over all other sectors as a target because of the unique nature of our business and the quality of the data that we house, both financial and health related. And so this has become a real issue for our members. You have seen Michigan hospitals, Michigan health insurance companies that have fallen victim to ransomware attacks. Unfortunately, we haven't heard the last of this. So it's another issue where Michigan Health and Hospital Association is focused today and certainly into the future. So again, Chris, thanks for giving us an opportunity to share a bit of a window into the challenges that we face, but I'm also very bullish on the future of healthcare. As I said, a lot of great jobs here today and certainly in the years to come. So thank you for the opportunity.
I think in looking at the Michigan Future Business Index, what Brian said, we got to find a way to manufacture people. I mean, it's that simple. There's got to be a solution to it, and our birth rates do not indicate we're doing that. So I think we're looking at some drastic immigration reform after the election year. Okay, next up, we're very happy to bring up Julie Pingston, who's the CEO of the Choose Lansing, which you may remember as the Convention Visitors Bureau. Love this mission because they bring people here to Michigan for the experience to drop their dollars, go away, and hopefully come back. And they've done an incredible job. To the one person that I have admiration for because she started her new job in tourism the day before the pandemic. Please welcome Julie Pingston.
I just is that not going to be part of my introduction? Sure. Glad to be with you all today. Thank you for the opportunity to give you an update on tourism and hospitality in our region. And if you're not familiar with our organization, our mission is exactly what Chris said, but maybe in a nicer way up there on the screen, that we really are here to develop this community as a visitor destination, to bring people to this community, have them experience all the wonderful things that we offer. In our industry, we do say it all starts with a visit. So if you're here to bring a new business to our community, you're going to look to do a residency at one of the hospitals, that your first entrance into our community is usually through a visit. So it's our industry's important task to make sure that all that goes well. So I wanted to start off with what Chris said. You may know us as the Greater Lansing Convention and Visitors Bureau for 60 years. And with a 20-year-old brand, last year we decided to abandon all those things. So we are now Choose Lansing. It was very purposeful. It was a year-long process to get to the point to choose the name and the logo and everything that went with it, because it positions us nationally. When we go out and try to bring conventions and meetings, amateur sporting events to this community, we're giving an imperative and we're talking about our great community. So the Choose Lansing, you can jump to the next one, Jeffrey, stop taking my picture. There's what it looks like. And we also are the umbrella for our Greater Lansing Sports Commission, the Lansing Sports Commission. So as you see, we do represent the entire region, and so it was a very difficult conversation of how to represent the entire region with the word Lansing. Well, we're owning that we are Lansing. When we travel, we are from Lansing. We are representing this community, even if we're living in DeWitt or our business is in DeWitt or Mason or Williamston. And so we go out to the market nationally with the Lansing choice in front of the people that we're working with. So we launched that in late August, and August 31st, and then go big or go home on September 1st, the first Michigan State home football game. We threw it on the ribbon boards in front of 72,000 people. It went well. We've had zero complaints. Everyone understands what we've done, understands that this is the message that needs to go out nationally, and the message that everyone can gravitate to. So now into the brand, what we're finding is that everyone loves the new look, but also wants to be a part of it. And so we have been able to leverage that with our stakeholders in our community. So if you leave the airport today, you'll see the big welcome over the TSA board, and to welcome everybody to Michigan's capital city. And that's just one of the many ways that we're putting it out into the market. So I wanted to give you that update before I jump into some quick economic information about the tourism and hospitality industry. We are an industry in the state of Michigan that represents 342,000 jobs and a $27 billion industry in the state of Michigan. And so here in mid-Michigan, I had the opportunity once to talk to a group of fifth graders about tourism and hospitality, and I said, how many people do you think come here every year that don't live here? This one boy said, I think it's about 1,000. And I said, you are so close. It's 5.2 million. So that's always our context. That a lot of people in this community don't understand that people that come to our community are attending conventions, sporting events, and they look like us, they act like us. In Traverse City, you're like, oh gosh, they're a tourist, I know what they're here for. We're here, our tourists blend in, our convention goers blend in, and so it's a little bit of a hidden economic impact that we all should pay attention to, and I'll show you why now with the next chart. There, Jeffrey. One of our key measurements as an industry is the number of hotel rooms sold. And in 2019, we got to a record high of 1,060,000 rooms sold. And as you can see, in 2023, we are estimated to hit 1,040,000. That was unexpected, quite honestly. We really started to pick up pace after a very long struggle with recovering from the pandemic. And we were able to move forward in fourth quarter of 2022 with meetings and conventions coming back extremely strong. Their attendance finally came through. They were holding meetings all along, but the attendance did not really take hold until fourth quarter of 2022, which led us strongly into 2023. So we had a strong year in terms of the hotels that were actually sold. It gets to a different kind of story though when I jump to the true measurement of what we look at as an industry of hotel room occupancy. So how many rooms on an average day are sold throughout the region? And as you can see, we hit some high numbers in 2019 at 61.6%. And 21, we were excited to jump back to a high of 53.7. So we thought, okay, 2023, we're going to jump even further. But as you can see, 53.8, it doesn't look like a whole lot on paper. But if you look to the left of that screen, we added 794 more rooms, hotel rooms, to this community since 2019. And 400 of those rooms came in 2023. So it's great to have the new product, but it does affect our occupancy, because that is just every night, 800 more rooms have to be sold every day, every year. So that will then show on our next chart the 3-year comparison of where our occupancy for our hotel community has ebbed and flowed. As you can see, we are not a huge destination in November or December, so if anyone would like to help with that, create some big dynamic event, that would be great. But the red indicator is 2023, and you see in the early fall, when a couple of the hotels did open, that's where it started to taper down and actually fall below our averages. You can see, you can always tell when Michigan State comes back, and I'm not going to lie, the season that the football team had did not help this chart either. And we did lose a home football game. That's the Penn State game. Penn State travels extremely well. They did not come here. They went to Detroit. And our industry was very vocal with everyone involved in that decision, because that took millions of dollars away from this community. And the next chart will show the average daily rate that hotels receive, and that shows kind of the same chart, but some really high spikes in terms of the rates that the hotels are charging, and you can see how they come into play when campus is fully functional. So where do we stand now going into 2024? We are looking at a relatively flat year nationwide throughout the industry in tourism and hospitality. A lot of the things that needed to come back after the pandemic have come back, and a lot of pent-up demand got expended. So everyone wanted to take that vacation when they couldn't travel, or wanted to get out, go places, visit their families, and now they've done that, and they're maybe taking a break in this next year, seeing how all these economic factors that everybody has already brought up today, how that all shakes out and what that looks like. So we are watching that closely, but we do, as a community, have a lot of very robust and exciting events coming to town. I'm excited to say that Michigan State University has been a strong partner in their faculty and administrative professionals bringing their colleagues to the community. So some of the associations that they belong to, they're then bringing to our community to host them. So a lot of those are taking place again. And the one that is really intriguing on this list is the group from Wuhai. They are bringing in a number of people for 6 weeks in our community to be immersed through the Eli College of Business, Eli Road College of Business. So it's a unique kind of opportunity, again, through Michigan State University. Our sports commission is extremely busy, and we have, I think, six USA competition level events, so USA Hockey, USA Archery, USA Taekwondo, really impressive events. But we are also going to be the host of seven state championships for the Michigan High School Athletic Association. So a really busy and active year for our sports commission. And that is my message to everyone, that there is a lot of bubbling conversation about the sports market in our community. And we are deprived on facilities to host really impactful events in. So we are really aggressively moving forward with feasibility studies, market reports, which we already have, to create a sports facility. We're trying to drive this bus because there's a lot of conversation, but it needs to happen or this community will fall behind. And so we've got a few things bubbling that I'm optimistic about, but it's gotten to the point where, Dan's probably loving this, that Sam's Club on the south side is closed as a retail outlet, but there's tournaments that we're bringing people from around the country and around the state to compete in a closed down, nasty, sorry, it's not the ideal location. How's that? I live here, so. And that is exactly what Bill just said. We are a central location in the state, and we're easy to get to. We have great amenities, so they're going to come here. We just have to have the great facilities to house them. So anyone wants to partner, I will talk to you tomorrow. I will talk to you in 5 minutes. So lastly, I just wanted to go over a few quick things that really are impacting our tourism and hospitality market. We have put a lot of effort as a destination into our DEAI work, really focusing on the accessibility piece of what we do. We've been named one of the top 3 destinations in the country to come to travel for those on the autism spectrum. So we have partnered with a lot of our organizations to make that happen. And now it's taking hold. We're having a lot of success related to people coming to our community to be able to be welcomed in all the ways that they need to be welcomed. So looking forward to continuing that program as we go forward. We also have a number of new developments because there was not enough hotels being built in the last couple of years. We have 2 more coming. So we have the Town Place Suites in off on Wood Road and this I don't know what that was called. Staybridge Suites. We just found out about that one last week. So the Staybridge Suites. There are going to be sister properties there on Wood Road behind the Sam's Club. So those are the last 2 that we know in the pipeline. We just also had the DoubleTree, which everyone probably is familiar with as the Radisson Hotel downtown. They went through a large conversion and everything is brand new in that property, and they are now DoubleTree. They did a ribbon cutting last night. It's a really wonderful property. They have new ownership, new management company. Please check it out if you have not been there. It's a Holman property. The Lansing Center is receiving $5 million from the state budget to enhance some of their infrastructure needs, so that is coming forward. And as always, there's a lot of restaurants and attractions. Van mentioned about malls transitioning. Zap Zone is now in the Lansing Mall. Sounds like a fun place where I get to take my kid for his birthday parties. It was we did a post on that when they first opened, the day they opened. It went viral. We don't have a ton to go viral on this kind of information. 300,000 people gravitated to our reel on Instagram about Zap Zone. So the interest is there. It's definitely something that's becoming a thing in our market because now it includes meeting space, it includes food, it's becoming that all-inclusive type of opportunity. So if you want to hear more, I can go on for a lot longer, but I know we're out of time. But our annual meeting is February 27th at the Breslin Student Event Center. I invite you all to attend. If you would like further information, I'm happy to pass that along to you. Happy to promote tourism and always need your support, so thank you for having me here today.
Very fortunate to have Steve Japinga here to present for the Lansing Regional Chamber of Commerce. So please welcome Steve.
Can you guys hear me? Yeah, I can be loud. I'm not going to go through a lot of these things, and I was talking to Tim about this, and I do apologize that he couldn't be here today. Thank you to everybody here. I think everybody is a member, so thank you. But when I was talking to Tim, I was like, okay, so how much time do I have? And he said 5 minutes, and I'm like, I can literally talk 20 minutes on multiple slides that we're going to talk about, but a couple things. The big things I do want to talk about later on is things that we've been working on collectively as a region, a lot at the state level, securing dollars, and then how we put those into play on a local level moving forward in 2024. This is just from the U.S. Chamber of Commerce. A lot of what Mr. King and his group already worked on, a lot of the same stuff that the U.S. Chamber. We work very closely with the U.S. Chamber of Commerce. Actually, today they're having their State of Business Conference in Elderly Instruments. If you're unaware, here in Lansing, they were named Small Business of the Year in 2023. Tim and I had a chance to go and celebrate them in Washington, D.C. at the U.S. Chamber. So great partnership with the U.S. Chamber, outside of just supporting small businesses, but also elections, which I can quickly talk about later on, and we're looking for coming up in 2024. Jeff, I'm usually the forward guy on all the PowerPoints, so this is a weird place for me to be. So top business concerns, I wouldn't even say these are concerns, but this is from our Lansing Regional Chamber of Commerce members. We survey members every year. You've already kind of heard a lot of it, but economic development, job creation, talent education, infrastructure, healthcare, we heard from Mr. Peters on that. Public safety obviously is huge, taxation, housing. What we do with these as a policy committee, I've seen some of my policy committee members here. we're proactive and then reactive. So some of those, the public safety, taxation, there's some reactive issues. We're trying to be proactive in those. But those first three that Jeff mentioned, that is economic development, job creation, talent, education, infrastructure, those are the ones where we're trying to be proactive. So the next slide, and thank you, Jeff, for moving on that. So we've had, if you're looking at the state legislature, the changes that occurred for our region, having two of the appropriations chairs from our region is unbelievable. It hardly happens in the history of the legislature. So when we sat down with Senator Anthony, Representative Whitworth, those are both the Senate and House appropriations chairs, they challenged us as a region to put together a plan that we could go after that is based on here. So this is what you see, CRISP, Capital Region Improvement Support Package. You always have to have an acronym. I'm like, Julie, what is that? Sorry. So this is where we kind of broke it down. So if you can go back and look at what our members are telling us, that's what we were trying to make sure when we were working with our municipalities, working with all of our partners that are requesting dollars. We wanted to make sure we were putting them all in these types of buckets. You can see this ongoing state aid. This is we call it the Capital City State Partnership Support, but because of state workers not coming back, we worked with Mayor Shore and his administration to figure out what that the missing tax incentives that those state buildings are not paying on. That was the number per year that the city is now receiving from the state. So we did ask for 4.67 million. We got $1 million, so that's ongoing. It's a budget, so you can say it's ongoing, but we got to go continue to fight for that. And then those one-time investments. And Chris, Mr. Holman, I'll send this out to everybody so you can see the breakdown. We broke down every single one of these dollars where they're going to go. That was $530 million. We were successful in securing about $250 million in this last go-around. Jeff, you can go to the next slide. This is just an example of all of our regional partners. So a lot of people in the room, municipalities, even our statewide partners. And Mr. Peters, I'm sorry for not reaching out to you. We should have, but we were really looking at. This is when the Republicans control too, so we were trying to, position some of these other business groups. But, we are the capital of the city, so we have several statewide associations that are downtown that want to see downtown thrive. But our regional partners really stepped up, and that's where we were able to really lead together, working collaboratively with our Capital Caucus members, those in the state and Senate, as well as our counties. That Capital Council and Government, those are the three counties, so Clinton, Eaton, and Ingham County coming together. See one of our commissioners, the couple commissioners, actually maybe former commissioner, but the counties have really been outstanding leader in making sure that we're putting together these types of priorities, requests, and making sure we're getting that to our lawmakers, because forever, all those dollars are flowing to Grand Rapids, Detroit, Traverse City, Saginaw, all very important. But there is we all do live here, and this capital city needs to be funded properly. So, Jeff, I'm trying to think of what the next one is. This is an example. I know Mr. Trezise is going to come up, but what we've been working on, obviously closely with Lee, they're doing an outstanding job of making sure, a lot of people don't get to, drive around these places and see the developments that are happening. We also have all of the infrastructure dollars. I don't have it up here, but just an example of the incredible economic development that is occurring throughout the region. Again, Mr. Holman, I'll send you all the, you have this, but we also have all the infrastructure dollars. Jeff, you want to go to the next one? This is the big one. Obviously, it's a pain with all the roads getting fixed. This is what we asked for, so this is what we're getting. This is the one that's going to be the most annoying, I think, for everybody. The next phase of the 496 and 127 corridor. If you think, obviously, Michigan State, Trowbridge, you're going northbound and you're trying to get to Trowbridge, you got to do, 90 miles per hour. You're taking a 90-degree turn to get off Trowbridge. But the thing that CABCOG, the Chamber, all of our regional partners worked with the Michigan Department of Transportation is we are going to have a third lane going both north and south. Again, this is going to be going on, I think it's 2026, 2027. Pain in the butt, but it's going to be important. And the things that we're working on as a chamber, working again with all of our regional partners, is helping all those businesses in these types of corridors to make sure that people know how to get to them. Because that's going to be obviously a major impact to business, commerce, and important to make sure that the infrastructure is done. Jeff, go to the next one real quick. So looking ahead, I talked a little bit about those quickly. Regional healthcare, I think you heard that from Mr. Peters. You know, here in our region, Michigan State, McLaren, Lansing, Sparrow Health, Michigan, medicine, it's great. To have that rivalry, it's good for patient care. A lot happening there. New MSU president coming in. When is that, Janet? In March? Yeah, so he's coming in. So that'll be great. So the two things, the next slide, just hold on, Jeff, on that, but this is where it's going to be a little tricky. The elections, obviously we have president, U.S. Senate, 7th Congressional. At least for our region here, it's going to be really fascinating. We're going to be providing a lot of opportunities for all of you to be able to connect with them, but you know, having former Congressman Mike Rogers running for Senate, Peter Meyer from Grand Rapids, Congressman Slotkin running. I mean, we're going to be having a lot of people coming in and through the chamber, but also the capital city, and then the 7th Congressional District with Curtis Sertel Jr. and Tom Barrett. They're going to fight it out. They're actually going to be headlining our policy forum March, so that's going to be fun. I'm working on the rules right now of that debate. I don't know if there's going to be rules. But again, looking ahead, I talked a little bit about the state dollars and how we're going to engage on that. That'll be the next slide. But go back one more, Jeffrey. This City of Lansing Charter Commission. So if you're unaware, probably are, back in November, Lansing residents voted to open up the Charter Commission. This is the constitution of the City of Lansing. So 9 people have to serve on this commission. There's a special election coming up in May this year. The filing deadline is January 23rd. So we are actively, as a chamber, identifying candidates to run and serve on that commission. So if you think of what this commission can impact the constitution of the city, it's the form of government. Right now we have a strong mayor, Mayor Short. That could change to a city manager form of government, such as Grand Rapids had, City of East Lansing. So there's a lot at stake there, and we want to make sure that, how do I say this politically? Actually, we're videotaping. We want to make sure we have open-minded individuals that are going to be on there. Again, I'm a Lansing resident, you know, some of my neighbors, I don't know if I want them to be on that, deciding our fate. But that's going to be a big deal. I know all the other elections are huge, but this is, I mean, this is serious business on what's going to be happening. There's a lot. I can go into the city charter. You're probably going to hear a lot from us. But that was one item we did want to bring up because on top of that, and Jeffrey, thank you. You can go to the next one. Those state dollars that we were able to secure, now it's time to make sure that those are moving. And the biggest ones are going to be happening in the city of Lansing. That because of the state workers, because of the impact of what that means to our capital city, a lot of the dollars that were secured were for downtown. So housing developments, redevelopment City Hall, almost $100 million going into that downtown. Now here's the kicker. It's got to go through the process, the mayor and the city council. They don't always get along, right? So we just had an op-ed in the LSJ, and then we have not even launched this yet, but this is coming. But we're going to have a pretty aggressive advocacy campaign to rebuild Lansing, and it's based on all of those dollars that we secured in the budget last year, making sure those are being spent wisely. So we're going to be, the next couple months is going to be an onslaught. I mean, we're just going to be so proactive on making sure that city council, they have to go through the process. It doesn't mean that they can't answer questions and all that. It's totally legit. They got to do that. But also, we worked very hard as a region to secure these dollars. Senator Anthony's, Representative Whitwer, we had to make sure that those dollars are being used the best they can. And there's great opportunity. I know Mr. Martin was here to fill a lot of buildings downtown, but really change the skyline of Lansing to come. So we're really excited about that. With that, how many minutes we got? How many go? That's it? All right, thank you. You all?
Y'all remember the fix the damn roads thing, right? So that's what he was alluding to. Okay, so who's in charge of most of the economic development in the big mid-Michigan area? Of course, that's LEAP, L-E-A-P, and here is their executive director, Bob Trezise. Thank you
very much. A bunch of great presentations today. I gotta say, go Lions! Come on! I mean, the gods, the curse, the universe cannot possibly allow our former quarterback to win a Super Bowl with someone else and then come back and beat us on our home field. There is no way this can be allowed unless you're the Detroit Lions. So I'm looking forward to that. Very quickly, because of our time constraints here, but I want to thank so many of you in the room who are members of LEAP. LEAP exists literally and only because of our members. And we're able to do economic development that is, our purpose is absolutely to raise the prosperity, the health, the wealth, the happiness of our region and all people, all diverse people, everyone within our 3-county area of Clinton, Eden, and Needham County. So thank you for supporting our efforts that definitely have direct benefit and impact on all of us as a business and as an individual. We had a really good year in 2023. We brought in numerous projects, including what continues to be a historic level of what we call foreign direct investment. This is really basically brand new to our region over the last many decades. We've never been very good at that. And now we are very routinely, regularly engaged in landing foreign direct investment. And this is about as good as economic development can be for a community. You have to do that. Brand new companies, brand new jobs, brand new investment. And we've gotten so good at it that our reputation on the global stage is profound at this point. And very, very often we are the site in the state of Michigan, the last site in the state for these recruitment efforts. So we landed $78 million of attraction, $25 million expansion, and here's an important point too, $8.5 million for our entrepreneurial clients. That's follow-on investment, which is a very large and excellent number for us. Just over 500 jobs, $24 in average level salary, which is improving and good. We are very recently seeing those numbers creep up toward the $30 level, which is, well, you know, everything's complicated. Life was always bad and good and everything, but we think that's good because that's people having better lives and then taking out loans and buying your cars and your houses. You know, you guys get it and all that. 35 new quality, new company creations. We get a lot of press, a lot of stories about the buildings and the plants. We don't get a lot of press about one of the nation's very best entrepreneurial ecosystems that we have helped build, which is as profound and important to economy as anything. Just as one example, I'm not going to go into it now, but you know, we did land Norm Fasteners from Turkey. We went to Turkey. We finished the deal with their board of directors last fall. We went to Bath Township. We secured a tax abatement from a township that had never done one before. That was months of work. But in the last, and they've been great. I couldn't say enough great things about Bath Township. But then there was a problem with sewer. Well, we were able to interact with the MEDC and somewhere between magic and a miracle, secure $4 million for improvement of the sewer system. That project wouldn't be there. That incredible chart from our really incredibly important and great friends at the Lansing Chamber, Steve, showing all those projects, 95% of those economic development incentives are the reason why they're there. And so you can agree or not agree, like or dislike incentives, reality. They are absolutely required, especially when you listen to Van and you talk about the realities of financing. It requires public-private partnership. And anyway, we landed several others from South Korea, a couple of nice little technology companies from China. We had several great expansion projects. I'll move right on, Jeffrey. Again, just to touch for a minute though on this stuff we don't get a lot of press for, is our relationship with Michigan State University and our friends at MSU Foundation, and I've been doing this for nearly 30 years now, is stronger, like by far, than it ever has been. And I think this is a really critical point for us to make. I'd like to think a new president is coming in with Research Triangle experience. But things are going better than ever as far as what I mean is commercialization and the university being really dedicated to helping us and us helping them as partners grow technology companies. I'm not going to sugarcoat it. It's been very, very miserable for over many, many decades. Us and them. And that's crazy because we got one of the great world universities here. So you gotta have a pitcher and catcher. We're the catcher, they're the pitcher, and sometimes vice versa. But just a few important examples, in 3 of these companies actually came out of U of M, can I say that? And they're not here. But these are, one is a medical device tech related to bone testing, another is absorbable metal for implants, another is about robotic suturing, and is about commercialization, financing, finding locations, incubating, graduating to a bigger site, a bigger building. This is an ecosystem. And we being us, primarily MSU, and we are getting good at this, finally, after so many decades of being poor at it. The entrepreneurial activity, again, just 72,000 is actually a lot of money. It's too hard to explain now, but in business accelerator funds that really insert important money into critical startup companies that are tech in nature. Diversity, equity, inclusion, critical to us. Our Elevate, One and All programs, Level Up. These are nationally recognized at this point. They are remarkable in drawing more and more people from all populations into our economy, and they've been tremendously successful. Blazing on here. The Smart Zone work is another way for high-tech companies, primarily from MSU, but from everywhere, to connect into our community. For the first time ever, we've as a contractor manages that organization. We have a first-time, full-time executive director who has blown it out of the water and done an incredible job there. We've had a record level of site prospects. The reshoring and manufacturing is unbelievable. And over, the Lansing area is a absolute prominent player to land major global businesses. I mean, it's amazing, exhilarating, really, really hard work. Unfortunately, we seem this year to be finishing second place over and over. Detroit News, I'm still under a stupid NDA, but you may have read in the Detroit News that they reported that we finished second place for Micron, a $100 billion project, the largest project in economic history of our region. They needed 2,000 acres, and they selected New York. A couple more went to Indiana that were in the semiconductor. Everything we're dealing with is electric car, electric battery, and semiconductor industry. While we're doing that kind of work, we have an amazing relationship with the Ultium electric battery plant here. We are continuing to be driven to wanting us to really become a semiconductor economy and also become the electric car and battery capital of North America. And we're actually very close to doing that. That's the future. And we have the largest of the 3 Ultium plants being built. We have a long-term contractual relationship with Ultium. Carrie over here, Kepler and Michigan Works, thank you. Amazing partnership working with them. Lansing Community College, Gold, Chad, crew, everybody. Amazing Piper and Gold, MEDC, Leo. As always, everything is partnership. While we're doing all that, that's maybe all RIP. There's the mortar, people development, diversity, equity, inclusion, talent, art and culture, all of that. But we now work very heavily on what we call business ecosystem issues. Ultium needs childcare, housing, and public transportation. And so we work very hard on that. We created the region's first capital area child care coalition. Again, Carrie, Kepler Michigan Works, thank you very much for your leadership. And I know many others, United Way and others that are partners in that. Don't worry, I'm well beyond third base slide. I'm getting close to home play here. 3.5, okay, preparing for 2024, just really quickly. We have landed a $3.5 million grant, small business hub grant from Michigan Economic Development Corporation. This is the largest grant, like by far, in the history of our region to work on entrepreneurial business startup work. This is a 3-year endeavor. It's going to ramp up what is already a very good entrepreneurial ecosystem into a phenomenal ecosystem. But we've landed all kinds of other grants in appropriation from the State Senate, from the State of Michigan, Diversity, Small Business, a Rural Connections grant. We're landing many, many millions in site readiness. We're continue to manage 66 million in infrastructure grants for the Lansing plant. We have a huge medtech initiative and ag tech initiative as well. Finally, sliding safely in the home plate here is it's frustrating. I mean, we're on the global stage, we're performing better than ever, but we keep finishing second place in a number of these. We're getting first places too, but I want to land those big ones. A $4 billion investment did this year select us. We won, beat out other countries, other states, and then a few weeks ago, their board of directors put on, in quote, indefinite pause that decision. So people are watching the economy right now, and they are watching politics, like who might be the president later this year. It matters even now what presidential candidates are saying, and perhaps that screwed us up a little bit. The lack of large 2,000, 1,400 acre industrial sites is killing us, as well as lack of buildings. And we have 4 incredibly important state economic development incentives, which we've played a big role in crafting with the state legislature. They must pass, or we're not going to be able to lay a lot of these projects. Thank you, Chris, very much. Appreciate it.
Let me bring up Charlie Ballard. It says here he's retired emeritus. When you applied for this, you didn't tell us that. This guy knows more about the Michigan economy than anybody on the planet. And kind of loosen up your vocal cords, because you're going to finish up here singing a little bit. Please welcome Charles Ballard.
Thanks, Chris. I know that we're several minutes behind schedule, so I'll try to go briefly. But the big story is, if you had asked me 12, 15, 18 months ago where our economy would be now, I would have said not as good as it is. That is to say, the U.S. economy, people have been predicting, lots of economists have been predicting a recession. People have predicted a recession in 2022. Didn't happen. And then all through 2023, we were maybe going to have a recession, and it didn't happen. And this is what I said a year ago when I spoke to this group. We may or may not. Well, we certainly didn't. Next slide, Jeffrey. We're not even close to a recession. And I think this is a remarkable success story. Does that mean that 2024 is going to be smooth sailing? Not necessarily. All sorts of things can happen. But at least for now, we are, the economy is still flying. There's talk about a soft landing or a hard landing. We haven't had a soft or a hard landing. We're still up in the air, still making progress. The next slide shows this is a headline from the Journal a couple of weeks ago, and I want to point in particular to confidence rises. The University of Michigan's Consumer Sentiment Survey, for a long time, largely I think due to COVID and then to inflation, consumers were grumpy. They were not feeling good about the economy. They were not happy about a whole bunch of things. The December survey had an unprecedented uptick, 14-point improvement in consumer sentiment. And it was across the board. It was men, women, old, young, black, white, Republicans, Democrats, everybody improving their assessment of where the economy is. And as you know, that's a really good, if people are happy about stuff, if people are feeling good about the economy, that has real effects, because people then will go out and spend money, they'll go out and invest, they'll do the right things. So next, most of what I'm talking about here is at the US level, but I'll make a few comments about Michigan and the Lansing area. So the Federal Reserve, okay, we got this inflation, and it wasn't an accident exactly. We had supply chain issues, and then all the stimulus checks and the Paycheck Protection Program, good ideas, but we way overdid them. When you're sending checks to households with $200,000 income, that's money that shouldn't have been spent. And that overloaded the economy. We got inflation. So the Fed quite properly, because they have a mandate to try to have stable prices, they've been pushing on the brakes for a year and a half. And, and that has slowed down the economy, but not all the way to zero. Next slide shows the growth in employment. And this last one, more than 200,000 jobs gained in December. A remarkable achievement given all of the headwinds from the high interest rates. So this is, in my view, really good news. The US economy added 2.7 million jobs in 2023, much better than I or most other economists would have anticipated. Next. This is just going on more about the tremendous success. Unemployment below 4% nationally. Employment now 5 million jobs above the pre-pandemic peak nationally. So the US economy is in better shape than I thought it was going to be, and I'm cautiously optimistic that 2024 will be a pretty good year. Am I cautiously optimistic about 10, 20 years from now? Well, when we're pumping out $1 trillion a year in federal debt, and when Social Security and Medicare are scheduled to run out of money within the next 10 years, we got some issues. But for the moment, looking pretty good. And the reason that all this has happened is that inflation has moderated. Next slide, just to show you the trend of inflation. We have managed to mostly get inflation down very close to the target without causing a recession, or at least not yet. And so that's one of the more successful episodes of monetary policy in recent memory. Next slide. How could you do this? Well, a big way that we've had this combination of good outcomes, employment growth with moderated prices, is that American workers have been making more stuff. And productivity grew very strongly in 2023. If productivity grows fast, that's kind of like, that's lubricating oil that makes everything else work better. Do I have any more water in here? Sorry about that. So far, just about the U.S. as a whole. Michigan, as you know, and this is not a new story. Michigan, we have some long-term structural difficulties that have made it such that we haven't grown as rapidly as the rest of the economy, for the rest of the U.S., the average for the U.S., for 60 years. So if I show a slide, and next slide, this is recent. This is employment. Thank you, Janet. Employment coming out of the recession, and I could show you a dozen slides like this, with Michigan not performing quite as well as the rest of the United States. And the big drop, both nationally and in Michigan, in employment, but then the employment, as we came out of COVID. But then the important part is this last year or so, where our employment growth just has not been as fast as the nation. Next slide. In 2022, now I think 2023 may be a little bit better, but 2022 Michigan fell to 39th among the 50 states in per capita personal income. That's the lowest we've ever been. In the 50s, we were as high as number 7 on a couple of occasions. We fell to 38th on several occasions in recent decades, and now to 39th. The next slide shows you some comparisons. And my question for you is this because Jim Blanchard made a mistake? Or John Engler messed up? Or Jennifer Granholm messed up? Or Rick Snyder messed up? Or Gretchen Whitmer messed up? No, not really. This is because of long-term structural issues, by far the biggest of which is that we were very disproportionately into manufacturing, especially durable goods manufacturing, which is more cyclical than other sectors. And it's been a decades-long struggle to move ahead out of the relative decline in manufacturing. If we could do one thing that we're not doing nearly enough, it would be to educate our children and then to find ways to get highly educated people to stay here. But that's, you can't snap your fingers and fix that. So, but back up one slide, Jeffrey. So, 39, this is in nominal income, no adjustment for inflation. And I like to use this partly because we can compare this data series all the way back to 1929. In this century, the Commerce Department started making a price adjustment, and quite reasonably. Next slide. It's cheaper here than in some of the states that had the highest incomes. And so if you adjust for cost of living, those differences are squashed somewhat. The gap between us and Massachusetts is less than it would look like, but it's still a gap, and the ratings, next slide, the ratings don't actually change very much. Michigan is 39th if you don't adjust for price level, and we're 36th if you do adjust for price level. Notice, Wyoming is number 9th if you don't adjust for prices because they don't have many people and they got a lot of oil and gas and coal. But they're number 1 if you adjust for prices. It's cheap to live there. So which of you is going to move to Wyoming? Oh, okay. Actually, down near the bottom, I didn't include Hawaii. I should have. Hawaii is in the 20s, I believe, in nominal. But excuse me, if you adjust for prices, Hawaii is 49th. It's expensive in Hawaii. Does that mean people aren't going to go to Hawaii? No. So, cost of living, I don't want to put too much emphasis on regional differences in cost of living because they reflect something. Next slide. So, good overall for the U.S. economy, some long-term challenges for Michigan. But for our region, we keep moving up. The ranking, there are 83 counties in Michigan, and here is per capita personal income, and these rankings haven't changed a whole lot. Oakland County is the most affluent county in Michigan, and that has been true since the late Cretaceous period. But Clinton, Eaton, and Ingham have moved up several spots in the rankings. And in fact, Clinton, Eaton, and Ingham would be above the Michigan average if it weren't for Oakland County, which is kind of the 800-pound gorilla that really skews the data. So, Bob, keep up the good work. We're doing a lot of things. We're doing a lot of things right here. I also like to emphasize, just because we're not as high in the rankings as some other places doesn't mean that this is not a great place to live. And that, in fact, I think is one of the things that we need to sell the most. If you want people to come here, it's because we've got a good quality of life. And that will help, I think, in the long run. Next slide. Yes. On that hopeful note, let's sing. We're behind schedule, so I'll be brief. But anyhow, this is the first verse of the best known. Michigan has more than one state song. This is the best known of them. Michigan, My Michigan, written in 1902, and sung to the tune of "Oh Christmas Tree." I'm gonna sing it whether you like it or not, and I invite you to sing along. A song to thee, fair state of mine, Michigan, my Michigan. A greater song than this is thine, Michigan, my Michigan. The whisper of the forest tree, the thunder of the inland sea, unite in one grand symphony of Michigan, my Michigan.